Facebook is dropping like crazy right now, and in this video I wanted to go over the reasons Facebook is dropping, my interpretation of the news surrounding it, a look at the recent earnings, and finally give my opinion on where I think the price could go over the next couple months. So the first thing we have here is the 6-month chart for Facebook, and you can kind of see how the stock was trending up over time and then eventually ended up peaking out around 380. And what we've seen since then is a pullback in the month of September. Granted, September was a weak month for the entire market. However, the pullback in Facebook, as you can see here, is a lot more severe than what we saw for the market. And you can kind of see around the 1st of October, we actually get some leveling off here in Facebook. It's almost like it hit a bottom based off the news and the weakness we saw in September, and it's kind of leveled off. And then it even started spiking up here in the middle of October until we see a recent pullback here in the last 5 days. So in the last 5 days, we've actually gone from 340, 342-ish, all the way down to where we're at right now, around $312. So that represents a 8.24% decrease in the stock. And then over the last month, we've seen, like I said, it kind of leveled off here. So it's down kind of the same amount of what we've seen only in the last 5 days of around 8.35%. But in the last month, the difference between this 382 and the 312 number we're at right now, you're looking at a potential upside of 22%. So there's been a pretty severe pullback. So what we're kind of going to look at next is what was the news surrounding this huge move in the downward direction, and then what's the reason kind of for this more recent pullback. So the first thing we have up here is an article written by The Motley Fool of why Facebook has nearly dropped 11% in the month of September. And what they touch on here is obviously the overall weakness of the market from higher interest rates being a fear and the US government's debt ceiling. But the biggest thing that's directly related to Facebook is what I have highlighted here. So the Federal Trade Commission filed an antitrust lawsuit that seeks to retroactively unbundle Facebook's acquisition of Instagram and WhatsApp, claiming that the company has used its dominance to squash competitors. So basically claiming that Facebook is a monopoly and has a monopoly over the social media industry. Kind of a lot of this comes on the back of a former employee, Francis Haugen. I'm not sure if I'm pronouncing that right, but basically they released a bunch of documents called that they're naming the Facebook papers that go over kind of some of the practices within Facebook and why those things are creating problems basically around the world and throughout the economy, which I'll get into here in a second. So here we have a good article by the Washington Post that kind of outlines the key takeaways from the Facebook papers. So I'm not going to go over it in depth, but to kind of touch on the main subjects here, you have basically a claim here that Zuckerberg is saying one thing, but internal research and other factors are showing something different than what Mark Zuckerberg is saying at his public hearings. So this is kind of an example that they gave was that 94%, Zuckerberg claimed in front of Congress that 94% of hate speech it finds before a human actually reports it. But in fact, some internal research that was done actually showed that less than 5% of all hate speech is removed on Facebook. And then there's kind of some back and forth here, but the other kind of factors that they're showing or things that were brought up in the Facebook papers is it's dropping its guard and before the January 6th riots at the Capitol. That's kind of more political, not going to get into that a whole lot. Facebook fails to effectively police content as much around the world, and they give kind of a factor in here that 84% of Facebook's efforts are actually going only towards the United States, while the rest of the world is only getting 16% of Facebook's effort in kind of policing content. And then down here you have Facebook chooses maximum engagement over user safety. Again, kind of relatively unimportant, talking about kind of what you'd expect. The last thing on here is Facebook took years to basically implement a simple fix for anger and misinformation, it talks about how it gave a lot of weight to angry emojis over basically likes, saying that they were 5 times more likely to see posts that had angry reactions, wow, haha, or toxic content basically, versus content that had a lot of likes. What I really like to touch on, a lot of these are more either political or kind of touch into how Facebook operates, which obviously Facebook should optimize maximum engagement. I mean, that's kind of what their point is. It's kind of like YouTube showing you what videos have been liked a lot, have a lot of comments, have a lot of engagement on them. I mean, it is part of the system and kind of the reality of a social media platform. The one that touches to the actual business case of Facebook and should kind of, at least in my mind, stand out most to an investor of what could cause potential downside in the stock is this first claim. So obviously, if Mark Zuckerberg is claiming one thing and then in front of Congress, and then internal research and other factors are showing something different, that could present issues, right? Because if they are going back, in fact, and the Federal Trade Commission is claiming antitrust against Facebook, then obviously if they re-look at some of this data and he's lying about things either knowingly or unknowingly, it doesn't necessarily look good for Facebook, and that could go a long way in pushing Facebook or pushing the Federal Trade Commission's case against Facebook that it is in fact a monopoly. So out of all these points, this is kind of the one that stands out to me the most, that I think kind of deserves at least some research if you're planning on looking into and investing in Facebook, is understanding kind of what was said, what was done previously, and then if you kind of think it's warranted that antitrust case could go through, then I would advise against investing in Facebook. But if you kind of see the pattern and think this might be a little blown out of proportion, then obviously some of the things we'll get into next might allude you to the fact that Facebook might be a good investment. All right, so the Facebook papers, that really accounts for this large drop that we're seeing throughout September, as well as some of the economic concerns that we were having over the month of September from interest rates and the debt ceiling. But more recently, we have this smaller drop that started on October 21st. So if we jump over to this article that was posted on October 21st, you can see that a lot of these stocks, social media stocks, dropped after Snap reported earnings. So Snap reported earnings and they missed revenue for the third quarter, and they even kind of downgraded their earnings for the fourth quarter. And a lot of this comes on Apple's new iPhone privacy changes that kind of is disrupting advertising. It kind of prevents some of them from tracking people's how they maneuver throughout other apps and kind of what they're looking up, so that it's a little bit more difficult for some of these companies to run ads to their users. So what they also get into in this article is that Snap kind of warns that as the supply chain gets disrupted, you're kind of seeing that, or they're expecting that some of these advertisers will actually pull back their advertising dollars, which makes sense, right? If a company doesn't have an item to actually sell, then why would they advertise for it? So in Snapchat, you actually saw a pullback of around 22%. It pulled back quite a bit on all of this news, but in some of these other social media companies like Facebook and Twitter, you only saw kind of 2 to 5% pullbacks in some of these stocks. So it kind of had a broader effect across the market, as Snap was kind of one of the first people to report earnings, but you kind of saw the effect here, and that kind of accounts for that more recent drop in Facebook stock. So now let's go over Facebook's most recent earnings, and what you're going to kind of see here is that they beat earnings per share by only 1.34%, and they missed revenue targets by 1.74%. So what that looks like is they reported $3.22 versus an expected $3.18, and then their revenue reported was $29.01 billion versus the expected of 29.52 billion. So you're seeing a really kind of small miss, and this kind of aligns with what you saw from Snapchat, where they missed on their revenue, a little bit lower kind of than expected. But what I tend to like to look at is their revenue year over year. So what you're seeing up here is year over year, they actually saw an increase of over 35% on revenue, and then diluted earnings per share, you're seeing a increase of 19.93%. So almost a 20% increase on earnings per share. And what's most impressive about that is when you really think about it, last year, obviously in 2020, a lot of people were spending their time at home, sitting on Facebook a lot more often, and really what you're seeing now is a lot more people being out and open to going out and doing things, going actually into the office for work, where they can't sit on Facebook, or they aren't sitting on Facebook in their free time. So to have an increase of 35% in revenue year over year, and an increase of almost 20% on earnings per share year over year, in my mind is actually fairly impressive when compared to kind of what we saw from last year in 2020. So if you've seen my Alibaba stock analysis, you've kind of seen this before, and this is how I like to predict price based off of PE ratio. So what we do is we compare the PE ratio of Facebook over the past 5 years, what the stock market currently is, and then we're looking at FANG stocks, because that's kind of what Facebook is grouped with. So Facebook over the last 5 years is running around 30.58, and we're actually pulling that from this number here, so it tracks Facebook's PE ratio over time, and then down here you can see we've got 30.58 for the average PE ratio over the last 5 years for Facebook. And then the second thing we've got on there is the stock market, so we're pulling that from this website, and right now this is just the average PE ratio of the stock market. You can see it's a little bit elevated, but we're running at a 28.67, so I think that's a good point of comparison at the very least. And then FANG stocks, this one's kind of more out there even, and we're actually taking the average of all these FANG stocks. These are pulled from this website right here, MarketBeat. We've got all these kind of numbers thrown in there, and we're getting the average of all these numbers, which comes out to 47.17. So what we do here is we basically take the price, multiply it by what we believe the PE ratio should/could be, and then divide it by what the current PE ratio of Facebook is. So that gets us these numbers down here. So what we're looking at, and I'll show you here kind of the calculation. So like I said, you're taking the price, multiplying it by the average or whatever PE ratio you want to compare it to, and then basically divide by the current PE ratio. So when we compare Facebook to itself over the last 5 years, we're actually seeing that if it was at the PE ratio where it's average for the last 5 years, the price would actually be at $427. When you compare it to the market itself, it would be at $401. And then when you compare it to all the other FANG stocks, it would actually be at $659. So what we have down here is the potential return. So you've got 37%, 28%, and 111%. So in my opinion, when I look at this number for compared to the FANG stocks, I think it's kind of blown out of proportion. You have Netflix and Amazon who are really affecting the overall PE ratio there, and I don't think that's necessarily a good comparison, so I would tend to ignore that one. What I think is most telling is kind of these two numbers. So I think Facebook could reasonably trade between a 25 to a 30 kind of PE ratio. That's where it's obviously traded on average over the last 5 years, and I think it's reasonable to kind of expect that from a company that still has a lot of growth in front of it. So if we kind of look at these two numbers, we can see that we could expect Facebook to be around a $400 mark. So what that presents is around a 30 to 35% upside in the stock. So really the question is can you find this return from other stocks and basically look at that versus the risks that you see in Facebook, which we kind of talked about in this video, of whether you think the Federal Trade Commission will kind of be able to have a case against Facebook in antitrust, or do you think that's blown out of proportion, and do you think the stock will kind of trend back up and continue kind of at its normal pace? So those are all kind of questions that you kind of have to decide for yourself as an investor, and if you think it's worth the risk, then invest the money. If you think that it's got further to drop and it's not worth the risk and Facebook might get broken up, then it's probably not worth investing in. So ultimately that's your decision to make, and I appreciate you watching the video. And if you have any comments or questions, just drop them down below. And if you like the video, drop a like down below. And if you want to keep seeing videos like this, make sure you hit that subscribe button. So thanks again for watching, and you have a great rest of your day.